Hey, everybody, Joshua Phillips here with Churchill Mortgage. It is Friday, September the 5th, and I am sending this market update out on behalf of the Phillips team here at Churchill Mortgage, which includes Amy and Jesse. As I always like to say, if you're working with the Phillips here at Churchill Mortgage, you are in great hands. We love to serve our clients. Well, what better way to close out a week than with some great news, as you're already seeing here on the headline. But, you know, I had to bring out something special today, and that is a saxaboom. If you ever seen a saxaboom before, Jack Black, I think, made this famous. I'm going to just in celebration give you a little bit of celebration. All right. All right. We brought out the saxaboom in honor of today. It's a great day as we are seeing mortgage rates drop again, and we are now sitting right about the best levels of really the last year. You can see here it's suggesting a 30-year mortgage rate drop down to 6.29. That's a change of like 80 basis points over the, just since May. That's a big improvement in rates. No, it's not 3% interest rates. Probably never coming back. That was the anomaly. But these are really good interest rates, and we're even seeing some situations on a 15-year or maybe an FHA or VA loan. We're even seeing some rates down and getting in the fives. So rates are quite good. And what's the reason for that today? Well, the reason for that today is that we got a poor jobs report. Hardly any new jobs. Anytime, traditionally, when we get sort of bad economic information, that can lead to better interest rates. And in particular, I think it's solidifying the idea that the Fed's going to cut the Fed fund rate on September the 17th. Now, we'll talk about that a little more in a moment. Well, let's pull up here what we always pull up. If you're new to this is a mortgage-backed security chart. Mortgage-backed securities are where mortgages are bundled into securities and sold. And that's most directly where you can see what's happening with mortgage rates. By the way, let me just, if I may, let's come in here. I love to show people what's happening with the bonds. We always talk about the 10-year Treasury bond, 4.0, the 10-year Treasury right here, the yield 4.076, just down 0.1. That is really good. And again, best levels we've seen in a long time. So just another piece of good information. All right, so back to the mortgage-backed security chart here. So mortgage-backed securities are where mortgage rates most directly derive their value. This screen right here, pretty much every mortgage professional in America has this screen up, and I'm sharing that with you so you can have this information. So all you need to really know to understand, and this is a Japanese candlestick chart, is that green is good, red is bad, and the higher the security price, the better mortgage rates are doing. That's just the best way I know to explain it. So you can clearly see here on a 3-month chart, we have been going, a little bit of a roller coaster, but the roller coaster's been getting better. Mortgage rates have been getting better. Now, let's pull back here to a 1-year chart. Look here. So this is where we were a year ago, and we are about, we had a little rally in April. That was right before the tariff news that just sent mortgage rates higher and security prices lower. And we've been kind of fighting our way back ever since then. And we're sitting here again at the best levels we've had in about a year. In fact, really strangely, let's pull up a 2-year chart. It's been interesting. I love these charts. So we got to the worst levels absolutely in years back in October of 2023. You can see how low we got there on the security prices. And then we had that nice bounce back that went to about December. And then we came down, and then we came back up. And we came down, and then we're coming back up again. Now, here's the concern that we want to just be aware of, because things are not necessarily going to improve forever. Let's not get too crazy and just start rolling the dice and thinking that rates are going to just keep improving forever. They are not going to do that. There will be other news that comes out that will probably, counter information that's out right now. But last year, around this time, September, I think it was the 20th, when mortgage-backed securities were right at their best levels, that's when the Fed dropped the Fed fund rate 50 basis points. And as we've talked about many times, what happened after that? Mortgage rates actually jumped over the next few months by a full percentage point. So honestly, it's got me a little nervous. I think on my last market update, I said, you know what? This feels like a buy the rumor, sell the news type information, which is something they talk about in stocks, which is like the rumor that, and the Fed cut's already been baked in, basically. It's pretty much 100% done deal that on the 17th, the Fed's going to cut the Fed fund rate 0.25%. But that has already been basically baked into the market. If they don't cut, or if they cut 50 basis points, who knows what's going to happen. But again, all that to say, be cautious. If history repeats itself, we may be peaking, and then we may see rates actually get a little worse after this. Now, I don't know what's going to happen. I would love to say that rates are going to stay steady to improving at this point. But, right now, we will take this headline. Where'd the headline go? Well, the headline here about mortgage rates. Let's see. Let's pull it back up one more time. Yeah, and this is not about a big drop just today or just in the last few days. So, but it is leading to some really good rates. So listen, if you want to talk about your situation, specific interest rates for you, or you want to work on getting pre-approved, we are certainly here to help you. We typically send this out in an email. My email includes a link to schedule a call. It includes an application link if you want to get started. And if you're looking to refinance, gosh, this is really a time to start taking a look at refinancing. We've already gotten some clients started on a refinance, and we're going to hopefully be helping more clients refinance in the coming days and weeks. Anyway, have a great weekend. Thanks if you hung in there to the end of this video and keeping track of this mortgage market information. Take care. Bye-bye.